What's up? My name is Austin Rutherford and welcome to my channel where we talk all things business, finance, and real estate. Right now, everybody's talking about how the stock market is in this crazy free fall right now and how the crypto market is in a crazy free fall right behind it as well. The real question you need to be asking yourself is the real estate market next? In this video, I'm going to give you my thoughts and my opinions on what is going on in the markets right now and if the real estate market is next to crash. But before we get started on that, if you could smash that like button for the YouTube algorithm, I greatly appreciate that. So I started out and I showed you those charts on the stock market and the crypto market. But the thing that you got to understand here, that's a very small window of time, very small window of time. You know, crypto being down 10, 20, 30% in a day, very small window of time. So what you really need to do is you need to zoom out. So if you look at the stock market and you zoom out, you can see that, you know, over 5 years, it started way down here and it went way up here, right? Same thing with crypto, specifically Bitcoin. You know, if you zoom out, you can see it started at $1 like 8 to 10 years ago, and then it's grown to $66,000 at its peak. Now it's about $30,000, which is, you know, a 55, 60% decline, which is huge, but like you went from $1 to $30,000. So you gotta understand you have to zoom out to really get the real perspective in these times. In times like this, everybody tends to start to get emotional. And when people get emotional, they start making bad decisions. And when people make bad decisions, they start selling to get out of things, even at a loss, to try and get cash in their hands. But if you really understand why this is all happening, a big reason that the markets are down, you know, pretty significantly is because the Feds continue to increase their interest rates. So what actually happens when the Fed increases their interest rates? And right after this, we're going to dive into my opinion of the real estate market, but you got to understand all this to get to my opinion. So what happens when the Fed increases the interest rate? When that happens, the cost of money becomes more expensive, right? To borrow money is more expensive because the interest rate is higher. So when that happens, individuals, people stop spending as much money because they have less extra money because they're paying a higher interest rate, and businesses stop spending as much money, hiring as many employees, and reinvesting as much into their businesses. So spending all around goes down. What happens when spending goes down? Income goes down and profit goes down. When income and profit goes down, guess what? Stocks specifically, when they show a loss of revenue or less revenue than the previous quarter, people get fearful and they're like, oh no, like the crash is here. You know, the company's going to go bankrupt. Then they start selling stocks. And when they sell stocks, the market goes down. When the market goes down, more people get fearful and they sell more stocks, and then it continues to go down, and it's a never ending cycle. It's a snowball effect. You know, money stops circulating because interest rate goes up. Then companies have loss of revenue, which then leads to stock prices going in a downward spiral. Now, on the opposite side, when the Fed decreases their interest rate, money becomes more accessible, so more people get access to money and then go out and start spending more money. So it's kind of like a balancing act, right? But the problem with low interest rates, which we had a lot of recently, and why the Fed is increasing rates at the speed that they're increasing it right now, is because when there's low interest, there's tons of money moving around, which then means inflation is going to go through the roof. So after all the stimulus money came out from the government, everyone was like, man, inflation is going to go crazy. And the government was running around saying, oh, well, you know, this is just transitory inflation. This isn't real. It's going to slow down.
It didn't slow down.
You can't just print that much money and not have inflation. So inflation is going crazy right now. And that is why the Fed, in my opinion, and a lot of people's opinions, is increasing the interest rate to try and slow down inflation to bring it back down to a reasonable level. So do I get why they're increasing interest rates? Yeah, absolutely. It's either inflation goes through the roof and then that can cause a whole nother world of problems, or they purposely increase interest rates to slow down / crash the market. So that's the stock market. Now on to crypto, right? And there's three things that are really working against crypto right now. Number one is that crypto tends to follow the stock market. So if the stock market's down, crypto usually tends to follow that. The second thing is in crypto, it's still a very new class, but in crypto, what happens normally is 4-year cycles. So at the end of 4 years, there's a huge crash, huge sell-off, and then it runs up for 4 years, and a huge crash, huge sell-off, and then it runs up again. Right now, we're at that 4th year. So a lot of people were predicting that a crash was coming because we're at that time period in the cycles within crypto. And then the third reason, again, it's a very new asset class. It's still deemed as highly risky. So when the market starts going down, where do people start pulling their money out first? Very risky assets, which crypto is usually at the beginning of that list. So the market started going, more people got scared, more people started selling, which then pushed the price farther down. And again, it's a snowball effect and a downtrend, unfortunately. So now let's get on to real estate. So as rates go up, again, the cost of money becomes more expensive. So as rates go up, less people can afford less house, which means less people are going to be buying houses, which could lead to a real estate market crash. Listen, if the interest rates go to like 10, 12, 15%, it's not good for the real estate market in any way. It's not good for any market in any way, shape, and form. But the thing in real estate is that there's two huge things working against a real estate market crash right now. And the first one is simple supply and demand. If you Google, housing shortage in the United States, there's all types of numbers out there showing you how we do not have enough houses to fit the housing demand right now. NPR.org says we're 3 million houses behind where we need to be right now. And there's really two reasons for this. One is in 2008, when the market crashed, a lot of builders went completely bankrupt. And those, employees and workers went and started elsewhere at an entirely different job outside of construction. So there was a lag from 2008 to many years after that of not really building that many houses because there weren't many builders around because they all went bankrupt. And then once they started to finally pick back up and start ramping up the building again, COVID hit. Guess what happened? Everybody got laid off of work, and it's been hard to get people back to work, especially in the construction business. Prices are through the roof. Delays are happening all the time, everywhere. Getting people just to come on site to work. I'm in the real estate business. We deal with contractors every single day. I own almost 100 rental properties. I've flipped hundreds of houses. I've built new construction. Like, getting contractors to work right now in today's day, it's very difficult just to get workers there on site. So all those things combined is causing a housing shortage. So if you don't have enough supply and the demand's through the roof, how do you have a crash there, right? And I get the demand, might come down because of interest rates and all, but the question is demand going to crash so significantly that it's then less than the supply of current housing? And number two is hedge funds. Again, demand. The demand's insane right now because on top of, the normal, American dream of everyone wanting to be a homeowner, hedge funds are coming in with cash trying to buy up everything that they can. So if they're buying everything, that means there's less opportunity for regular homeowners to buy properties, which means that there's more demand and still less supply. So again, how do you get past a supply and demand issue? So the final question, do I see a real estate market crash? If rates continue to go up and hit 10, 12, 15%, yes, I definitely think we could see a crash. Or if hedge funds pull out and liquidate their entire holding, they own thousands and thousands and thousands of houses at this point. So if they're like, this business model really doesn't work, and they click the sell button and flood the market with inventory, then yes, we could see a housing crash. But if those two things stay relatively calm, hedge funds don't liquidate everything, and interest rates don't go absolutely off the charts, I don't really know if we're going to see a complete market crash, but we are seeing a leveling off or a slight dip right now, which I think is healthy. We had the craziest run of home values going up over the years than we've ever had, ever in the United States. It can't continue like that. There's some places that gain 40, 50, 60% a year in value. That's not sustainable. So this was inevitable. The slowdown, the leveling off, the dip had to come at some point. So I think that's what we're in right now. I think we're in a slight dip or leveling off. And hopefully interest rates, hedge funds, all those other things don't continue to go crazy and then turn this into an all-out market crash in the real estate world. So I'm curious to see what your thoughts are, what your opinion of the current market is. Drop a comment below, let me know what it is while you're down there. If you could smash that like button for the YouTube algorithm, I'd greatly appreciate it. Hit that subscribe and notification bell so you can get all this content going forward. As always, appreciate you being here. We'll see you on the next one.